How ATO looks at positive and negative gearing properties.
From tax perspective, basically everything gets tabulated. So you might make a bit of positive income here, for which you may have to give tax, but on the other hand, there could be property which is negative, in which case you will make a loss. So technically they get nullified. If assuming that you're making 5,000 profit and 5,000 loss, they get nullified, so you don't pay any tax. So eventually it might come to a stage where both become positive, in which case you will end up paying tax. But until that time, if it's negative, both of them are like net is negative, you might be getting some tax benefits until it becomes break even or positive. So that's the way it works. Ultimately it's all tabled. If overall you're making positive income, then you will end up paying tax. But if you're making a loss, you'll probably get some part from the tax office back. Yeah, so that's how it works.
Impact on negative gearing and depreciation cost.
Not really. They're two separate components. So, for example, an old property, say for example it's 40 years old, you may not have much of depreciation or any depreciation at all, and it might be negative. So in which case you will still be able to get the negative gearing benefit. So your overall income is negative, so which means money is going from your pocket, and the loss gets added to your incomes, which brings down the income, and you might get some benefit because of the negative gearing. On the other hand, there could be a new property where depreciation is higher, so you will get more from the tax office. These two are separate component. There's no linkage as such. This has to be taken separately because these two can vary. There's no point connecting the two. It'd be just confusing. Yeah.